What if you didn't have to wait until 60 or 65 to truly enjoy your life? What if work became a choice, not a necessity? That's the real meaning of financial freedom, having enough money and assets to cover your lifestyle without being trapped by a paycheck. Most people think financial freedom is only for the lucky, the rich, or the genius investors. But the truth is, it's mostly about strategy, habits, and time. Today, I'll break down how you can reach financial freedom earlier than most people, step by step. First, understand what financial freedom actually means. Financial freedom does not mean being a billionaire. It means your passive income exceeds your expenses. Passive income can come from investments, businesses, rental properties, royalties, or digital products. If your monthly expenses are $2,000 and your assets generate $2,500 a month, then you're financially free. This clarity is important because without a clear definition, you'll chase money endlessly without ever feeling secure. Second, spend less than you earn. It is the non-negotiable rule. No matter how much money you make, if you spend everything, you stay broke. Most people increase their lifestyle as their income grows: bigger house, newer car, more subscriptions. This is called lifestyle inflation, and it's the biggest enemy of early financial freedom. Remember, your savings rate matters more than your salary. Someone earning $50,000 and saving 40% will reach freedom faster than someone earning $150,000 and saving 5%. Track your expenses, cut unnecessary costs, and redirect that money into assets, not liabilities. Third, increase your income aggressively. Cutting expenses has a limit. Increasing income doesn't. If you want financial freedom early, you must outgrow your paycheck. There are following ways to increase income. Learn high-income skills like sales, coding, marketing, design, AI tools. Start a side hustle or online business. Freelance or consult. Negotiate salary or change careers strategically. Your main goal is to create a large gap between what you earn and what you spend, and invest that gap. Fourth, invest early and consistently. Time is more powerful than talent when it comes to money. Thanks to compound interest, money invested early grows exponentially. For example, investing $500 per month from age 25 to 45 can outperform someone who invests double that amount starting at 35. These are some common long-term investment options: stock market index funds, retirement accounts, real estate, business ownership. The key is consistency, not timing the market. Waiting for the perfect moment usually means missing years of growth. Fifth, build passive income streams. Financial freedom accelerates when you stop trading time for money. Focus on building assets that work while you sleep. Dividend-paying stocks, rental properties, online courses or digital products, YouTube channels, blogs, or apps, automated businesses. At first, these require effort. But over time, the income becomes detached from your daily labor. Ask yourself, backhand index pointing right, if I stop working for 6 months, will money still come in? That answer tells you how close you are to freedom. Sixth, avoid bad debt and master risk. Not all debt is bad, but uncontrolled debt is dangerous. Bad debt includes high-interest credit cards, consumer loans for depreciating items. Good debt can include business investments, real estate with positive cash flow. Always calculate risk. Financial freedom isn't about gambling, it's about calculated decisions with long-term upside. Conclusion: financial freedom isn't about luck. It's about intentional choices made consistently over time. Spend less than you earn. Increase your income. Invest early. Build assets. Avoid bad debt. If you start today, even small steps, you're already ahead of most people. Because the goal isn't just to be rich. The goal is to be free. And at the end, don't forget to like and subscribe.